MD announced their Q3 2023 earnings this week, the last week of November 2023, and had their conference call. In this video, I want to go through and compare my projections to their actual earnings and highlight the key bits of information that's going to help me predict or estimate their Q4 earnings. And I think I now have enough information to work on my 2024 earnings projections. So just a quick recap of what my number predictions were in yellow. And then I'm going to compare my numbers and highlight theirs sort of in three pieces. Look at the top line revenue, revenue by division and total revenue, take a look at expenses, and then take a look at the bottom line. So my revenue came from a few key tidbits. Particularly, I was starting to put in some revenue from the remote patient monitoring. Now, we ended up finding out in this call that they didn't have any revenue or almost no revenue from remote patient monitoring. So my Q3 health and productivity solutions division was too high. So that was where the main bit of my error came from. So the revenue in the HWS division was up quarter over quarter, and HPS was down. The HPS division was something I was really getting quite pessimistic about, but it's going to be a big driver in 2024, again, with the remote patient monitoring picking up. I have my 2024 numbers. I'm going to have to revise and push back. Late in their MD&A, it talked about, sort of taking to the end of the year to fully reach their 3 to 4 million per quarter. So my revenue and gross profit was a little bit high, again, because of HPS. I was impressed that they did continue to cut costs. I was assuming that there wasn't much left to cut. So S&M was down. General administration was also down. No acquisition related. I had started to cut a little bit, but came in slightly higher. So overall, a positive on expenses that they're still cutting them. On heading towards the bottom line, I did a reasonable job on the operating, getting to operating gain and loss. I was a little bit low. And then in other expenses, the financing cost was pretty close. I've updated my spreadsheet. It used to just be other income, but now it's other income and sort of other one-time items. I'm just going to lump all together here. So that's why I'm a fair bit off, because I've lumped a couple items into this line. So overall, the operating gain from continuous operations, or in this case loss, I was pretty close. From discontinued operations, I'm sort of happy that I was well off. I was predicting a loss of 1.8 million, and it was about $1 million less. Now this is pretty much just coming from RXI and Vision Pros, and then we got some, a lot of color on the Vision Pros loss, and it's 400,000 per quarter. So I'm assuming the RXI is about another 400,000 per quarter. So happy to be wrong there. EBITDA, I was too high in the loss, largely from the discontinued operations, and adjusted EBITDA, I was slightly negative and hoping it would come in slightly positive, and they were. So this was their first adjusted EBITDA positive quarter. So a few line items for me to work on my projections. Just pulling a few highlights from the MD&A, particularly for me, and what will lead to my Q4 and 2024 earnings estimates. Health and wellness services, not going to change my model going forward. And we've got, they sort of let us know about their annual recurring revenue contracts. Remote patient monitoring has really sort of become a bigger part of their health and productivity solutions division. So we have a lot of change in the MD&A on what is important. So that was just something I wanted to highlight. Their third quarter summary sort of really made it clear that there's these two losses, where the losses are coming from discontinued operations. 400 is coming from Vision Pros. I'm assuming the other 400 is from RXI, and they don't expect to get any appreciable revenue. They just want to stop the bleeding and spend that 400,000 or 800 in total in other places. Again, impressed with their continued cost cutting, and on the Q&A they talk about there's still more cost cutting to come. Normalized cash outflow was a little over 2 million, so they're getting closer and closer to break even on cash flow. And then in some of their calls, they've started to talk about what they would do in the future when cash flow is positive, and how they'd reinvest that back into the business. And I think that'll be some of the exciting parts of 2024 is when they can start generating a little bit of positive cash flow and reinvest it. All through, the conference call and all through the MD&A is, they're constantly still talking about this 3 to 4 million in revenue per quarter. But again, I had pulled it a little too early, and it's more going to be the back half of the year before we get that 3 to 4 million. They still haven't sold RXI or Vision Pros as of the conference call. And one of the questions in the Q&A was about Vision Pros and selling it and hoping to get it done this year. But with holiday slowdown, that may not happen. So again, in the outlook, again, sort of talks about this same 3 to 4 million, 2 quarters. But this is the first time I noticed this end of the year. So this is very key for me in modeling. A little comment about extending their debt and the maturity of their debt. Again, it was a Q&A comment, and they seem quite confident they'll be able to do that. And this isn't a company that says they're confident they'll be able to do something unless it's almost a guarantee. This is definitely an under-promise and over-deliver type of management, which is nice. So just pulled out a few of the Q&A questions. This is very point form from the conference call, and then the Q&A. So Karen Adams started. She talked about the margin drop and a bit of seasonality. The remote patient monitored in the US, the 2 to 4 quarters, and it not beginning till early 2024. So again, I'd started to put in a fair bit of revenue in Q3 and particularly Q4. So I gotta take that out and push things back. Constantly talking about double-digit organic growth on an investor day. They're a bit more specific with being in the high double digits and positive EBITDA. So not just adjusted, but positive EBITDA and cash flow is where they're heading. Talked about an increase in record high of new clients having multiple products. So this is really important. They don't have that positive cash flow to be reinvesting in the company. So they have to make very good use of their current staff, and cross-selling is just so important to getting to profitability, not piling more money into new staff. And they're going to be expanding into Quebec and Alberta. On the financial side, we got the comment that there was no significant revenue in Q3. So again, nice to know. Disappointing, but nice to know for numbers. Adjusted EBITDA was positive 1 quarter earlier. They did pay down some debt. I forget the exact amount. And they believe they have sufficient cash. So my one concern was how much cash they'd went through, and is there a bit of a solvency concern or raising money? But if they were paying down a little bit of debt, that makes me think this management has no concern about running out of cash. You wouldn't use some of your precious cash up with paying down debt. And they are seeking non-dilutive cash going forward. So not diluting us as shareholders. And we've got, and it showed up a few times in the conference call and more so in the Q&A, that Vision Pros is costing $400,000 per quarter. I was fearing this was more like $1 million per quarter. So about half of what I was fearing. And then talked about the the vote on reducing the share count at the AGM. So it's obviously something they're in favor of, but the vote wouldn't be to definitely do it. It would just give management the opportunity. And I think they said it would last up to 1 year, that they could reduce the share count. So just a few questions. There were only 2 analysts on the call. Asked about remote patient monitoring metrics, and the most important metric was just onboarding patients. And that came up into another Q&A question that I didn't highlight, but I think they want to onboard their current patients, and then they can sort of work on getting new clients and expanding into new geographies, and that they'd have to hire more staff to expand the remote patient monitoring into states where they currently don't have a big footprint. Sort of talked lots about Vision Pros and the cost per quarter already. So that was another question. And, they're hoping to sell it this year, but didn't give high confidence to that. Question about the cost savings, and they went through several areas where they're still going to cut costs. So this is not a company that's done and is going to rest on their laurels. They're going to continue to make this a very lean, efficient company. So I'll have slight more reductions in costs going forward in my projections. And then there was a question about the debt for refinancing, and they want to push out that maturities, and possibly when they're talking to the financial institutions, raise some of that non-dilutive or raise some non-dilutive cash. One other question from another analyst, I forget his name off the top of his head, asking about the onboarding or the ramp up of new contracts, specifically the ones from November 9th. And it was Q4 or Q1 2024. So there seems to be at least a good 2-quarter delay from when they sign new contracts to when we'll start seeing them in the revenue. And that certainly seems to also be true in the remote patient monitoring. So what's up next for me? I now feel like I have enough information to work on my Q4 estimates, and I'm not sure if I'll release Q4 by themselves or I'll add them into a Q4 video. So I'm fairly excited about where this company is. It's just trading so cheaply. Last I saw was 12.5 cents on Friday, December 1st. I just don't know what's going to drive the stock up. By the end of the year, being cash flow positive, generating, having significant growth, I think will be important. But it's a small cap, not a good time for small cap lands. You'd think you just have to be patient if you're invested in them. I now have about 1/3 shares. I'm a little over 300,000, so a fair chunk of share count. Obviously not ginormous amount of money at 12.5 cents per share, but I'm definitely invested and have that bias. So it's always important to realize somebody's bias or perspective. So hopefully you found this video useful, and look forward to my Q4 projections, which I will probably put out sometime before Christmas.